So let's look at index futures. I'm looking at NASDAQ. Today is 25th August 2025. I am 12 minutes into the silver bullet time period, and we've already had the earning range. We've already had the first macro of the session. And so I want to talk about what kind of news we have this week, and then we'll get into tape reading what we have in this silver bullet time period. So today, Monday, 25th of August 2025, we only have new home sales that have already come into the marketplace. New home sales was supposed to come up at 10 a.m. in the New York session, and now it's 10:13. So we're gonna look at that, and then tomorrow we have medium impact CB consumer confidence and Richmond manufacturing index. Then on Wednesday we'll have no news for the dollar index. And then on Thursday, we'll have unemployment claims, and on Friday, we'll have core PCE price index. So it's not really an exciting week, but we're going to look at what this week has, especially going into the closure of the week. That's on Thursday and Friday. We're going to see what we have. So on my chart on my left, I'm looking at a monthly chart for NASDAQ. For the whole of this month, I've been getting bullish prices. I've been anticipating this whole candle here for NAS 100 to end up bullish. So that means I've been looking for higher prices every single week, every single day, unless it's the days that end the week, days like Thursday and Friday. So I've been anticipating a weekly high on Thursday and Friday on each week, and then during those days I've been looking for lower prices. If we form the weekly range during Monday, Tuesday, and Wednesday. So I've been anticipating weaker prices on Thursday and Friday because that's the ideal top three. So we're trading in the last week of August. It's 25th of August. Today is Monday. So I'm anticipating this whole week to kind of like form the further end of it. But if you look at the daily chart on the left, right here, on the right, I mean, if you look at the daily chart, we opened up here for the month, formed a down close candle, and then we traded higher throughout the month, traded into last month's high on 12th of August. And then you can see we formed a swing high here, and then we started trading back into the range. This trading lower into the range is it's a result of seasonal tendencies, especially for Nasdaq and US 500. That is E-mini, S&P 500. If you look at seasonal tendencies on August time period, we normally have price having weakness. So we formed a swing high here after taking out last month's high on 12th of August this month, and then we formed a swing high here. And then we start trading it back into this range from this swing low to this swing high. So we went back into the range. So let me delete this fib. So after trading back into the range, on Friday we had Jackson's Hole Symposium plus Powell's speech that made the market really trade back higher in this sell-side imbalance price inefficiency. So we are neither trading at this high, above this high here at a monthly high, or we're neither trading at a monthly low. But if you pull up a fib from this candle's body to this high, you realize that we're still trading inside this premium. So on Friday, we from this discount and trade back into this premium. So my interest going into today, going into the end of this week, is either we'll trade higher above this sell-side imbalance based on efficiency, and then try to rotate into these highs so that we can form a high for the week, and then going into on Friday, I'll be looking for lower prices. So it's just Monday. We've opened up Monday here in the middle of the range. We opened inside this sell-side imbalance based on efficiency. I'll be watching this inefficiency going inside today's trading, and then at the same time we'll be watching this Friday's high. That's the buy side, and then we'll also be watching these highs here. So that's what we'll be watching into today, and let's look at what we have going into the lower time from 1 minute. I mean, lower time from 4 hours, and then we'll go into a 1 minute chart, and then we'll look at the opening range. We'll look at the first presented fair value gap, and then we'll look at the relative equal highs or relative equal lows that are present in price right now. So I want to annotate this sell side imbalance by an efficiency. That's the high. And this is the low. And then I'm going to check that concept of encroachment, that is the midpoint of this inefficiency. So I'm going to pull up a fib, and then I'm going to annotate 23,533.9, and then this is dotted. So the midpoint of this sell-side imbalance by inefficiency. So if you look closely, we closed almost close to that in the midpoint of that inefficiency, and then if we look at where we opened up today, it's almost on that same level. So there's a very small new week opening gap right there. So we're going to look at how we trade back into that new week opening gap. So look at a 4-hour chart. So I'll talk about this new week opening gap, and if we trade above this high here, then we'll be trading into this high here, and then there's a new week opening gap for last week. We're gonna look at that. So this is what I wanted to look at on the 4-hour. On the 4-hour also, there's this sell-side imbalance efficiency, but I don't want to annotate that because it's almost at the same level as this cost conversion for that daily CB. So we're gonna go into a 15-minute, and then we're gonna look at what interest does price has to go into liquidity or into inefficiency. So immediately I looked at the charts today. My interest was picked by these buy-side imbalances and efficiency that was formed on Friday, and then also my interest goes above this Friday's high, that is the buy-side liquidity pool that I'm looking at. So if I'm bullish on that monthly chart, I'm anticipating power of 3 on that monthly chart. Ideally, I'm anticipating higher prices throughout the entire month, but when we come to the closure of the month, we must respect that power of 3 for that monthly candlestick. So we must anticipate price to trade from its recent highs back into the range to that closing price in the monthly candlestick. So I've talked about what we're trading inside the range. It's really difficult to tell whether we are trading inside a premium or a discount. So we're gonna look at very small ranges. Like right now, we're trading. I'm looking at these relative equal lows here. If we start trading lower, if we start going below this buy side balances and efficiency, then I'll be anticipating for price to start trading into these lows. But if we remain on these sell imbalance based on efficiency from the daily chart formed by this was on August, 19th of August, 19th of August was last week on Tuesday. So last week on Tuesday, we formed a sell side imbalance based on efficiency. If we remain inside this CB, then I will anticipate price to start moving into this high. So it's really Monday. We don't really have a lot to anticipate about price. We've just started the week, and then we're gonna see what we have going deeper into the week. So I've already talked about this buy-side balances and efficiency from the 15-minute. We'll go into the lower time frame and then start to look at what kind of relative equal highs or relative equal lows we have. So this is a daily CB. This is a 15-minute BC. So price will always tend to move to higher time frame inefficiencies. So my interest again goes into this Asian session high for today. I want to see price get back into these it's a very small new week opening gap, but price will always tend to refer to those levels. So we'll go down in 1 minute and then we'll see how price trades around the PDRs that are around that 1 minute time frame. So 1 minute, I wanted to talk about the open range before I get into this 1 minute. If you look at price, we closed up on Friday here. That is 23,501. That's around the 500 big figure. And then today's price action, we've opened up with a discount opening range gap. So obviously the discount opened up at 20,441. That's 100 points out of an opening range gap, and I'm very much interested in that opening range for today. That discount opening range. So discount opening ranges normally I define them by dark olive green, and then that is 501.5. That's the high. And then I want to extend this opening range gap 2 days earlier. Today's 25th, so 26, 27. And then this is up to today at 4:30. And then I'm gonna annotate this opening price right there. So that's 100 points out of an opening, not 100 really, but it's 441 to 501. That is 60 points worth of an opening range gap. It's around 60 points. So we're gonna go into the lower time frame, 1 minute, and then we're gonna see what has price done so far in regards to that open range. So you can obviously see we've already traded back into that opening range, obviously the benefit of hindsight, but I'm gonna look at the opening range gap for today, and then we're gonna see what we have. So we opened up here, had a run into these relative equal highs here, this high and this high, had a run these relative equal highs, and then we ran lower through these relative equal lows. You can obviously see that we have a very huge fast present fair value gap CB for today. So when I extend this CB on time, that is always on right there, and then I'm gonna take the midpoint of that fast presented fair value gap for today. So I've already talked about how we've had new home sales. New home sales is a medium impact on the dollar index, but it's normally a very huge impact news on shares. So we went over, took out this sell side, and then traded back into this fast presenting fair value gap. Went low again with some back and forth price action, and now we are trading inside this upper portion of that opening range gap today. So I'm gonna take this opening price, and then we're gonna look at the midpoint of that gap. That is 501. This level is 501.8. Let's look at the correct closing price. That is 501.5. So this is 501.5. This one is 501.5. So the mid gap for today is right here. That is 171.7. on that mid gap normally and treat it with medium face line. We're gonna delete this, and then that's what we have. So we have obviously the first present fair value gap. I wanna also annotate the start of today's silver bullet time period. So you can see from this high here to this low, we are trading on the premium side of this opening range. So from this high to this low, that's the opening range. Inside this 30-minute range, immediately from the open, we had the first present fair value gap, went high above this equal highs, went lower below this relative equal lows, and then we beat inside this range, and now we are trading on the upper portion of that opening range gap. So there's nothing really here interesting for us to be taking an advantage of, because I've already explained how on the daily chart we are trading in the middle of the range. We look at the daily chart here on the left, we're trading in the middle of the range, and I've talked about how I'm interested in this sell side imbalance by sign efficiency. So if we start trade higher, I want to see it trade into this mid gap of that daily inefficiency. If we're really weak, I want to see price starting to trade on the lower portion of this opening range gap for today. So today I'm gonna be focused on Nasdaq only. I mean, I will refer to US 500 in a bit, and we'll see whether it has an ability to. It wants to go higher, or it wants to consolidate, or what kind of instruction that US 500 want to portray today this morning. So this is the last week of August, and then next week we'll be having NFP. So next week will be interesting, and I think my bias for September will really be determined how we close this week. I might have a bullish bias for September. I mean, if you look at seasonal tendencies, price normally tends to start moving higher in the month of September. So I might have a bullish bias, but we must wait for this week to end, and then we'll see what kind of bias we'll have going into September. So if you look at this weekly chart for NAS 100, this is a very nice swing low we have here. Now that we're trading still inside August, we might be anticipating weaker prices. We might still be anticipating weaker prices. So we had a very nice swing high here on the weekly. So my interest going into this week will be this discount week and that midpoint of that week. So from this closing price to this low, that level 23,243.3. If we stick on the lower portion of this opening range today, going into tomorrow, then obviously I've talked about anticipating price to start to rotate into these 15-minute balances and efficiency from Friday. But you can obviously see this is very bullish, and we've moved through this discount opening range gap, or we're trading higher. Now I want to see this level here. So this level will be very important for me to see whether we have an ability to move into this buy side liquidity pool that is that Friday's high or today's high. That is Friday's high. Of course, I want to price fast reach into this daily high for today, and then obviously we'll see whether it wants to start to move lower, or we'll see how price wants to go into this Friday's high, not buy side. So all these are buy side liquidity pools, but how price will move higher inside this silver bullet hour will really be determining how we'll trade into these liquidity pools. So talking about today's range, we are neither trading at a premium, we're neither trading at a discount inside today's range. So we're trading basically inside today's range. If you look at a daily chart, so look at a daily chart, we're still trading inside today's range. From this high here that was from today's Asian session, and this low that was found in that has been recently formed right here. This today's low. So immediately we opened up, we ran into this low and formed today's low. We ran these lows out, and we formed today's low. So we moved out from these lows here. We're moving higher. So far there's not really any interest that price has picked. We've only moved higher. We moved through the midpoint of today's discount opening range gap. We moved higher. We clicked that high, trade through it, and then we moved lower. This to me is accumulation. This is the first signature that price wants to move into this high here and this buy side. So for me, inside today's range, we're trading at a premium. Price will really be interesting to me if we move above this buy side. But so far, we're really beating around this range. If you look at price here, we have a lot of wicks. These are a lot of wicks. They're not really interesting to me. So my interest again goes to this wick here that was formed in mid 5. So the midpoint of that wick is around the point of today's opening range. So we're moving higher above this high, trading at 23,505. So we moved above Friday's close, that is today's opening range gap high. So all what price is meaning to me today is we are really bullish. We've gone through this gap, we've retraced back into the mid gap, and you can see how we've accumulated and we've gone higher. We have a very small inefficiency here, and we moved higher away from that inefficiency. So we've gone above this buy side. So I want to see if price has an interest to go with this mid gap of this sell side imbalance versus inefficiency from the daily. Again, move into this buy side. That is the recent daily high for today. So this high here, this other high, that is Friday's high. So if price wants to go into this CB encroachment, then we'll see whether it has an ability to go into this high. Remember, we have the current new week opening gap at around this mid gap of that of today's opening price. I mean, the mid gap of this sell-side imbalance by sell efficiency. We also have today's new week opening gap. So price all has an affinity to trade into this 534 level. Last week we closed at the 0 GMT opening price, that is 23,514, 514, and today we've opened up 535. So 514 up to 535. That's an impressive new week opening gap. Let's notate that new week opening gap. So that is 514.5. And then we opened up today at 535.7. So 535.7. That's the week opening gap high. So with the fib, then I'm looking at that mid jump of today's new week opening gap. So this high is 537.5. I'm gonna put this fib to be at that price, and then this new week opening gap low, that is 10.5, is right there. So of course, that is 526 even. $526 even. As today's also requirement for our new week opening gap. So ideally, I want to see price rotate higher, bank into today's new week opening gap. So if we go through it, then we'll be headed into this buy side above around 39.4. So we've gone above this high here. We formed a swing high here. Let's say we start to repel this and go lower, or we'll start again rotating high into this current new week opening gap. So let me extend this new week opening gap levels to the end of today. Okay. So these are the only PDRAs that I'm interested in today, and we'll see whether price wants to move higher through this PDRA, or we'll wanna see price stay inside this opening range gap for today and start to move into this first presented fair value gap for today. So normally the first presented fair value for Monday, I extend it for the week, and price moves around that first presented fair value gap for Monday a lot throughout the week. So you can see there's not really a lot of volatility today. But we'll see whether price has an interest to do either one of these things I talked about. I don't really think this is really gonna have much interest price to want to trade these lows, but it will be best if we trade above this new week opening gap, and then maybe we start rotating to these lows. Also, don't look at the way we've traded on the upper portion of this 15-minute buy side, buy side assess and efficiency from Friday. We did not trade in the halfway level of that gap. We only touched the upper level of that. If we are ball where the upper level of that gap is, you can see how price only hit that equilibrium level on the upper quadrant of that 15-minute BC. So we hit that, formed today's low, hit that, and then we started moving higher. So this to me ideally is strength, and due to the fact that we've gone through today's discount range gap, I really think we're gonna move into the current new week opening gap, and then we're gonna trade into this buy side. The best case scenario, I want to see price come back into today's first presented fair value gap, and then start moving higher into this current new week opening gap. So I want to look at US 500, even though we'll not be looking at it a lot, but let's just look at it. So US 500, same thing here. I'm looking at these buy side balances, 15-minute BC. Then extend it into today's transaction. That in the midpoint of this 15-minute efficiency. That is dark gray. Still to end of today. So if you look at relative strength for US 500 and NAS 100, you can obviously see that US 500 is a lot more weaker than NAS 100. So for both indices, we have a new week opening gap ahead of in the premium side of where we're currently trading at, and you can obviously see that we also had a discount opening gap for US 500. That is a 10-point discount opening range. So it's not really interesting as NAS 100, but I'm gonna go into the lower time from 1 minute for US 500, and then we're gonna see what we have this opening session. So if you look at price here, it's not really interesting. Immediately we opened up at 5, that is the silver bullet. We had this week. We did not manage to get above this like we did in NAS 100. So you can obviously tell that US 500 is a lot more weaker than NAS 100. So if this has a chance to get into these lows, the relative lows here, so we can go into these lows here. So we've not moved back into the midpoint of today's open range gap. We're back at 23,480s. Again, I've talked about how I don't really expect a lot of price volatility inside this week, because there are not really any high impact dollar index news for this week. So I want to take the midnight make opening price for today. And then also I want to annotate the New York sessions opening price right here. So ideally, we're trading between these two levels. Again, we're neither trading at a deep discount or a deep premium. So when we're trading around inside these um, conditions, we're normally patient. We're normally waiting for price to trade into a premium level, and then we'll anticipate how price reacts on that premium. Are they selling it? Are they buying it? So this is the opening price. That's the New York sessions opening price. 13.2. And then I'm gonna look at the New York opening price for NAS 100. That is this candlestick, this small candlestick here. That is 419.2. Back to 1 minute. We've moved higher. I talked about how I want to see price moving into this current new week opening gap. So 510, I want to see it moving to 514, and then this mid gap. So we've left relative equal lows here. These are interesting to me. So I only wanted to look at US 500 and look at whether we are trading, whether we are really on the higher portion of today's mid and New York opening price. That means that I was looking at relative strength between US 500 and NAS 100, and I've come to the conclusion that we're trading weaker on US 500 than we are on NAS 100. If you look at a 1 minute on US 500, there's nothing really interesting here. So we opened up here. Been trading around this area here. The first position of your value gap for today for US 500 is these buy side balances and efficiency here on the 1 minute. So that is like the centerpiece for today for US 500. So we've gone through it a lot. So that means this is high resistance position for today in US 500. So NAS 100, we've moved higher. We've touched the low of today's new week opening gap, that is 514.6. We've moved to 517, and we're trading at 512 now. So I want to see price move into the mid gap of today's new week opening gap, that is 526, and then we'll see whether it wants to move into this buy side above 540. So far, there's no other PDR rate that I'm interested in looking at other than we are trading at a premium inside today's range. So we've entered into the second session, the second mark of this session, and we are 2 minutes in. So mid gap is 525. We're trading at 507 now. So this is the midnight New York opening price. You can see we've traded around that midnight New York opening price and inside the upper portion of today's discount opening range gap. I talked about how we ran higher from the swing low here around that mid gap, moved higher, and now we moved above this high, or we are trading below the current New Week opening gap. So New Week opening gaps are traded into a lot. They're traded into a lot. So what price is just leaving behind is relative equal lows, relative equal lows. So everybody is trying to buy this thing. Everybody's trying to buy it. I'm not really interested in buying it right now because we're trading at a premium. So we've got above this high here. We start to rotate lower, huge candlesticks lower. But my interest for this price action will be if we trade above the current New Week opening gap. Best case scenario above this buy side. So I want to see price leave these relative equal lows here and then move above this buy side above 540. So weeks without a high impact news like this week are weeks that one, there's very less volatility in price, and if you don't really know how price books around these kind of weeks, it can really be frustrating. It can be frustrating big time. You cannot anticipate price runs like the one on Friday every single day. You must know when they come, and it's really simple. It's the economic calendar. That's really the key to volatility. So let's look at how we are trading on the upper portion of today's opening range gap high. That is Friday's close. So what I want to see is a price run into this cost for equipment for this current new week opening gap. So 494 now. I want to see price go into 500 and stay above 500. So we're back into the midnight New York opening price. That's around 489, 490s. So once more, I'm looking at this sell side imbalance buy side efficiency at the midpoint of that CB, and I want to see price head into that midpoint of that CB, that is 534 level. So I want to see price move back into this current new week opening gap and then trade above this buy side. So it will be interesting to me to see how price trades above this buy side above 540s. So we move back into the current opening range gap high. We're trading at 5,000. I mean 23,505. 5,000. 23,505. So swing low here has a very nice bullish up candlestick. Look at the strength on top of the current opening range gap. We're moving higher. Very nice. So I want to see it move above this high and then back into 526. Best case scenario, I want to see it go into 540s. So 540 to me today is my current premium. So from 540 up to 580 these are 40 points. But obviously I can't chase it high even though we go that far. So for NAS 100, Friday's high was not last week's high, like US 500. That could be a very nice premium to be in. That could be a very nice premium to be in. Last week I talked about how I wanted to see the dollar being bearish from Monday going to Tuesday, Wednesday, and Thursday. And then we were trading on Friday. And I also talked about how I've been anticipating the week to be bearish, but we were not bearish on Friday. But coming at 5 p.m. my time, that is 10 a.m. in the New York session, then Powell was speaking. The dollar index rallied lower throughout the whole week's range. It rallied through Thursday's trading, Wednesday trading, Tuesday and Monday's trading lower. Very weak prices. And so it's really incredible, really crazy. I was thinking to myself that I'm wrong predicting the dollar to be weak, but we ended up closing bearish on the week after trading Monday, Tuesday, Wednesday, and Thursday high. So we made the weekly high on Friday, the weekly low on Friday, trading lower throughout, closing lower on the week. It was crazy. So we've moved higher into the current new week opening gap low, trading at 513.7. And then I was looking on the same Friday, I was looking at NASDAQ, and the first present fair value gap was really magical. It was really crazy. So trading at 513, 514 now. I want to see 525. That is mid gap of this new week opening gap. Look at the way it's headed into that 525. So we've traded back into Friday's close, and I want to see these. There's a very huge interest for price to move into 533 and 540, especially 540 because these are the current daily high. So we've moved from the current daily low to the current daily high. I mean, trading from this discount, trading higher. So on Monday, Tuesday, Wednesday, ideally I'm anticipating bullish prices, and you can see Monday is delivering bullish prices. Even though inside the silver bullet we've not managed to trade into a discount, but we're moving higher. We're constantly moving higher. So we've not touched the midpoint of today's new week opening gap. So this is where I'm anticipating the price to go into, and then finally 540s. Remember, we are trading inside the second macro of the silver bullet. How? So I'm anticipating still bullish prices. This is how we'll be trading um, in the most part of this week. Very, very slow price action, very, very weak key price action. That means a high resistance liquidity run ideally. But obviously, we'll be looking at premiums and discount. That's what the market is. That's how the market operates. So right now we are neither trading at, we're trading at a premium, but we are not trading at a very deep premium for smart money to have an interest to be selling this market from this premium. We can still move through this premium and even move a lot more higher. We can. So inside this morning price action, I love the way they've left these relative equal lows that are so close to the discount opening range gap for today. So we might, all I want to see is price going into this buy side. And then I will be interested in how it wants to come back for these relative equal lows. Because so far, everybody that has been bullish, they're happy and they are making money. They're happy they're making money, but not for so long. That won't be for so long. So we're close to 525s. Let's look at US 500. So US 500, we also touched these fast presented of a while ago. We have a very nice swing low. We're moving higher. So let's take a look at this cost of encouragement for this premium week. That is 461.9. So if we close above this cost of encouragement, then buy signal will be very nice to run into. So if you look at this 15-minute, we have a sell-side imbalance based on efficiency just above the midnight New York opening price. So that's where we'll be trading into. As NAS 100 moves into this buy side, US 500, I want to see it move into this inefficiency here. We have this, and we also have this, but these are not have not so far been touched. So let's highlight this. So this is the inefficiency that I want to see price head into. Yeah. So we've not touched, we've not closed above this upper level of this cost per question for this week. But I'm still anticipating a move above this high here and into this inefficiency on the 15-minute. That is, I'm still anticipating a move above 6,464.5 and then a move into this high. So now it's 100, very interesting price action. We've moved through that, the new week opening gap. So we're trading at 23,565, 567 now. Back into that mid gap of the current new week opening gap. So I've already talked about how I like this low because this low is 23,475. This low is 23,476. This is 476, 476, and this is 476 also. So 475. We have sell side here. Wow, sell side. Okay. Here's, so I'm looking at this sell side liquidity point below these relative lows. So we've touched the mid gap of the current new week opening gap. There's still this buy side here, or this possible question for that this for this CB. That's what I'm looking at. That mid gap right there at 533.7. So I'm still rooting for that buy side to be taken out, and then we'll see whether it wants to move lower sharply, or will still be staggering around this price point here. That's like 40.5. So we're trading at 518. And let's look at our 15-minute chart, clean 15-minute chart. So we look at this 15-minute chart. This is trend. There's nothing here looking like weakness to me. This is still trend, and I want to see price move above this high, and this high is 539.9. It's around that 540 level. So I want to see price go into this high here. So current daily low right there, right below this relative lows here. We're moving high. In order to see price move above this high. So if we move above this high, that will be the current weekly high and the current daily high for today. So it will be interesting if we see price forming kind of like a swing high here on this 15-minute time frame, and that will be one of the triggers to me anticipating a run into these relative lows. But first we must move above this buy side. So we must engage this bigger pool of buy side. And then now that the current new week opening gap will be below us, that will also be a very nice reason for price to want to move into this sell side. So see how we touched the possible correction for that new week opening gap. And you can see how it's reacting here. So remember, the silver bullet time period is up. And this is what I wanted really to look at. We moved high above today's opening range gap high, which is around this. The proportion of today's opening range gap high is around the midnight opening price. We went high above this high, back into this low, never took off this low, and then we moved higher. Current new week opening gap, moved back into the midnight new opening price, and then we traded into the cost of worshiping for today's new week opening gap. So I want to see still 540s. So if we look at this 15-minute candlestick, it's still bullish. We're still bullish. You can see we're moving higher still. So I liked the way we did not trade into the halfway level of this BC. That is still strength. I already talked about that when I was measuring how we managed to trade into the upper portion of that 15-minute efficiency here. We hit it once, twice, and then started moving higher. So if I were to be in price before we opened or immediately at the open, I could be anticipating these possible correction for that opening range gap to be traded into, and then lastly the current new week opening gap and this buy side. So this was a this is a discount buy because this is the current daily low. After we ran this last week lows, we formed the daily low and then started moving higher. We ran into this near this low here. It could be best if we went below this low, but we didn't, and then started moving into the current. First presented forward gap, and then we moved into the midpoint of that opening range, discount opening range gap. Very interesting. So we moved higher, stayed on the proportion of this discount opening range gap, and then lastly moved into the current new week opening gap for some encouragement. So this is bullishness. If you look at the 15-minute candlestick, that is obviously strength. And I want to see price moving into this high here that was formed from today's Asian session. So if we move with speed above this high, then we might trade into this relative equal highs on Friday afternoon session. So if you look at the bodies on this 15-minute chart for now, but these are relative equal highs here, and then there are a lot of wicks. So price obviously has an interest in that liquidity pull above this Friday's high. So we are so close to that midpoint of that sell-side balance, sell-side balance by side efficiency on the daily chart. We're so close right there. We've currently traded into 532.7, and that is 533. So 1.7, 1 point, and then we'll see whether it has it wants to reach into 540 by say this high here. That is today's Asian high. So very slow price action, but we managed to move higher. Today we opened up at 23,441. The silver bullet high has been 23,517. So from 441 to 517, that's 60, 50 points, more than 50 points. Been interesting. And we're still moving higher. We're trading at 530 now. So we've ended the silver bullet time period with a very huge consolidation. Not really a very interesting price action. And we're trading at a premium. So we're trading on the upper portion of the current new week opening gap. I want to see that 533 level being traded into, and then 535, and then 540. So there we go. We trade through 533 and 536. This high now is 535.4. So we're trading at it's the London close time period. So if we look at the 15-minute chart, nothing here says we are bearish. We're still bullish. So my interest is on the premium PDRAs that are currently in price. So this price it above 540s, we're gonna run into that, and then we'll see what the price has an interest for 580s. US 500, we've reached into that 15-minute efficiency that I talked about. So we went through these cost of refreshment, very nice, right there. We closed above it, and then we ran higher into that 15-minute efficiency that I've just talked about here. So we have this CB, we moved higher, on the 15 minute. This was a 1 minute cause of correction for that premium week. And you can see we moved into that 15-minute efficiency. So price will normally trade to areas you want them to trade into, but the problem comes in when you don't know the how it wants to deliver those prices. So this is a very nice move from this Costco for this premium week, that mid cap trading into this 15-minute inefficiency. Very nice price move right here. So my concern is still on NAS 100. We still have this buy side. So we've touched the new week opening gap high, and then we're trading lower now. So again, we've touched the concentration for that new week opening gap, 526.7, 525, back into 528. Let's see if it will overlap that new week opening gap and trade into that buy side above 540s. So very nice swing high on this area. Let's look at US 500 from a 5-minute perspective. So that's we're still trading high. So the buy side for US 500 is above this high. So I still want to see price range into this high. For US 5, I mean for NAS 5, NAS 100, I've talked about the current daily high. We're so close to that current daily high. And if we go through it without any inversion fair value gap being formed, then we'll be running into 580s, that is Friday's high. So look at the bodies, we're trading on the upper portion of the opening gap as encouragement. Very nice. That is this is strength. This is strength, and you can see how we're moving higher. So I want to see that buy side now. So 537 now. There we go, 540s. Very nice. Run into that buy side. See where we closed. This is still bullish to me. This is not bearish. This is still bullish to me. So we just gone about 540. But I want to see price devour that buy side and go through it and trade into around 550 or so. So remember we have this buy side above Friday's high, that is 580s. So we're trading at 542 now. And US 500, we still have this buy side above 6,469. That's around 470s. 470 right there as the buy side. We're trading higher still. So from Friday's Powell speech, we've been trading higher, trading into this Monday. We formed a very small inefficiency here. I mean, this high is 531 and this low is 536, so a 5 point BC. I'm not really interested in that BC. I could be interested in that BC if we closed on the upper portion of that buy side. Like if we closed here, then I could be interested in that. But we've closed right there on that buy side and then we've gone through it. This still bullish to me. We're trading above the opening price. It's actually supposed to be doubling because this Monday is meeting the opening price. It's supposed to be doubling all through. Oh wait, this also. Because I want to see this opening price throughout the week. So we've gone just above that buy side. Look at the way price wants to start to find weakness. So US 500, we've gone through that. We still have this 470 level in US 500. Look at a 15-minute chart. That's the buy side. So ideally, we've gone above this high. That is today's Asian session high. So we're trading at today's high, the current weekly high, the current daily high. So I want to be looking for every reason to want to go short right here, but price has to present something to me that that tells me that we want now to move lower. If it doesn't, I'm not really interested. We may still trade higher and higher and higher, but and we might also start to rotate lower. We might. Remember there are breakout artists here above this high here wanna go long on a breakout. And they are already long actually. They are already long. That level is 540s. They're already long, 2 points long, and they're celebrating it. Right? Now maybe soon enough, these profits they're still holding will start to erode. And what they do, they start moving their stop losses. Start moving their stop losses lower. So 15-minute time frame we're moving higher. We're remaining with 4 minutes till that this 15-minute candlestick closes, and then we'll see whether the next 15-minute candlestick will want to form a swing high or will still go above these relative highs here. That is 560s, and then we have Friday's high at 580s. So for US 500, we are so much far away from Friday's high. Last week's Friday's high for US 500, that was the weekly high. If you look at this 4-hour time frame, we formed the weekly high here. We formed the weekly high here on Friday. We failed to take out this weekly low here on Friday. Immediately, Powell was speaking, and then we ran high and formed the weekly high. So we also had the other week's high so close to last week's high in US 500. I was really expecting maybe we could move above this high, but we didn't. We just closed right there. But We've retraced, we've not even touched that 15-minute basic, like we've touched it last 100, and then we started to move higher. So my major interest will be if we what do we do after we trade above the current weekly high, the current daily high, because it's Monday. I'll be interested to see if I might catch a short trading into the range, or we might just trade higher and go above Friday's high. So far we have this buy side. We might trade into it, or we might fail to go into that buy side. You'll wonder what price, what interest does price have to do with the liquidity flows. So we've traded through that 15-minute CB. We have an inefficiency here. We've charged it, and we're trading above that inefficiency. But just remember, we're trading at a premium level. So the time is 11:30 in the New York session, AM session. I want to stay until midday in the New York session today, 37 p.m. my time, and then we'll finish this off. So we're spending time on this buy side. This to me are still relatively equal. So I want to see price move above that high, these highs, and then we'll see what that will move into 550s, maybe 560s, and maybe that 580 level. So far we're at 543. So we've not really formed any efficiency that is worth my interest. Even this one here is not really worth my interest. So if you notice here, that 15-minute candlestick has closed with it's an up candlestick, so it's interesting. So what will make me change my mind for being bullish anymore? I want to see this 15-minute candlestick that we just opened trade through this previous 15-minute candlestick and close on the low. Best case scenario, I want to see it close below this 15-minute candlestick. Then I'll be interested in taking a short into these relative equal lows. US 500 will trade back into the minute knock opening price. We're back inside this 15-minute CB that I talked about. So I want to see whether price has an interest to run above this high and then reach into this 6,469.4. So look at that. I've just talked about how I'm interested in these relative equal highs. We've gone through it. Very nice. So we're still moving higher. We're trading at around close to 550s now. 549, 548. Oh, I used to admire this kind of price runs higher. I mean, it's really interesting how we're just one-sided today, but it's really back and forth, back and forth. Which place can you really be interested in buying it here? It's really difficult. Where are you going to buy it? There's no inefficiency here inside this silver bullet time period. That's really a discount of some sort. So it's really difficult. So we moved above this relative equal highs that just talked about, the very nice bullish candlestick. Swing low here. Let's see if will rotate, start to rotate to these lows, or price will start rotating into 560s. When candlesticks start closing like this inside the first few minutes of this 15-minute candlestick, then I know we'll start moving above this high here once more. So if you notice here, we've moved back into this basic and then very high above these highs. So swing high right there. I like that swing high after we've closed this candlestick here. So again, let me just take this high here. Just at 9.9. So we moved above this high. Very interesting. This is the current daily high, the current weekly high now. And let's see whether we'll move through this basic and start to rotate into these lows. So I'm waiting until we close this 15-minute candlestick. Best case scenario, I've already talked about. I want to see it close. Then that will be a trigger for me to start to look for shorts. But otherwise, I'm still bullish. We might still go above this high here. So you can see how we are reacting above this current new week opening up. We ran into that BC, ran high, took out these relative equal highs here, and then we started moving lower. Very interesting reaction there. So we moved through this inefficiency. So these are the kind of premiums that I talk about: weekly highs and weekly lows. I mean, price must always move away from a current weekly high or daily high. Mostly how price trades around those liquidity pools, swing highs and swing lows that form the current daily high and daily low. If we go to either one of them, price must always come back into the range. So we've closed on the lower portion of this inefficiency. Take a look at this here, and you can see the midpoint of that inefficiency is exactly at the cost of approximate for that self inefficiency from the daily chart. So you can obviously see we've moved away from that high. We've ran this relative equal high. We're moving lower. So we've taken out this inefficiency, but we've not really formed any inefficiency, any sell side imbalance based inefficiency. So my interest is on these inefficiency. Then we'll see how the lunch hour macro trades through these inefficiency. Whether we'll have an interest to go below these sell side. So traded through these into the new week open, current new week opening gap, cosmic me very interesting. So let's see whether this inefficiency has the ability to act as an inversion for value gap. So we are back into that inefficiency. So we've gone through it. That's not really what I want to see out of inversion for value gap. So we've closed up on that time. That's really not what I want to see out of an inversion for value gap. That's not really good. So these are the first telltale signs that you'll maybe probably be wrong if you do anything stupid. If you try to, I mean, I'm looking for shorts. If we try to take a short right here, we might head above this high. So that's not really good for me. My inversion for value gap, or rather a normal inversion for value gap, we're not if we trade through it, if we go back into it, we're not supposed to trade through the proportion of an inversion for value gap. That's really the ideal. That's really the ideal smart money concept. So these run through that gap is not good for me to be taking any kind of a trade or to be any kind of interested in this price action. There's a high resistance level which run, and most probably I'll likely be wrong. So I want to see this high here. Remember, we have Friday's high on that 580s, so we might go into that high, or if we leave this high here intact and start trading low, then maybe we'll come back with that high again later, maybe with the lunch or macro or something of the sort. So we have 5 minutes until, I mean, 4 minutes now until this candlestick closes, and it's really of much interest of where this candlestick will close. If we close at the upper portion of this previous candlestick, then we're really bullish. We might get above this old, I mean, this new high here. So we've gone through that inversion for value gap. I want to see price accelerate through that gap now and start trading into this high here. So we look at the lunch or macro, and then we close this up. So basically, these are a high resistance liquidity run you're currently trading in. So 23,532. Basically, we're trading on the cost of operation for that daily sell side imbalance by efficiency right here. We're trading on the midpoint of this daily gap. So look at how we've exerted that cost encroachment lower. So let's look at that gap again, whether it has the characteristics that I'm looking for, or we'll just go through it again. I mean, ideally, I want to see price go through it again. That will be confirming the high resistance liquidity line that I'm talking about. If you look at the 4-hour chart, we're trading at a premium, obviously. My interest is on from this low to this high. We went low, went into a discount. They bought it on Friday, traded higher, and I still want to see price reach into this upper portion of this CB, and then maybe we'll be looking for lower prices from the upper portion of this CB. So this is a 15-minute outside candlestick. We took the high, traded low, we took the low. I've talked about how I want to see this 15-minute candlestick close below. Best case scenario, I want to see it close below this low. If we close below this low, that would be very good. So we went back into that gap. We've moved away. Look at the closing prices for this candlestick. Remember, we have the cost of correction for the current new week open gap here. So we moved away again through this inefficiency. I want to see this high here now. Boom, there we go. So 15-minute candlestick has closed right on the upper portion of the previous 15 minutes, even though it's an outside candle, but that closing price right there in itself, it's saying that it's really it's bullish. I mean, we might actually I want to see it go above this high here once more. Not that we are going to go above this high here once more, and then maybe we'll see price rotate lower going into the lunch hour macro that comes in the next 5 minutes or so. So we have this low here. This low is 23,522.2, and this low is 23,522.2. So these are equal lows. What's resting below equal lows? What's resting below equal lows? I can't hear you. Sell side. This is the first clues that come into my mind that we're gonna trade below these typical lows because retail traders have their stops below these equal lows. I mean, they went long here. They went long here. Where are they gonna put the stops? Right here. That's the retail trading one. So we're spending a lot of time inside this here because we are in a high resistance liquidity one. It's not really gonna be clear that we're gonna run into these lows. I mean, I know we're gonna get into these sales like in one way or the other, but it's really going to be moving in a difficult way for them to price it into these sales, like, especially now that we've spent a lot of time inside this efficiency. We've closed above it, we've gone through it, we are closing above it. There's nothing really here of much interest. And the first clues that came into my concern was that this inversion fair value gap, I mean, these now it's not an inversion fair value gap because it's not really doing its job of trading back into the range. It was not perfectly formed. Perfectly formed inversion fair value gap are gaps that go through that buy sell liquidity pool, and then best case scenario that inefficiency is right there on that buy side liquidity pool. So we closed right here. That was the first signature that it's not really gonna be good. And then we had this run here, retracement back into the range, and then right here, this candlestick here. This was the another telltale sign that we're gonna get to go above this high here, maybe. And then it's not really good for me to be taking a shot. So we've run through this gap here again. We've touched that old high from today's Asian session. So I want to see price go above this high here. So we have 2 minutes, 2 minutes until the lunch hour macro comes in. Telltale sign of a high resistance liquidity run right here. So let's look at US 500 a bit. So US 500, we've gone through this inefficiency and we've rotated lower. Let's extend this level here. So you can look at how price is reacting to that with the new copying price for today. So very few seconds and then we'll have the lunch hour macro coming into the marketplace. There we go. I like the way we closed right there. Let's see if we'll leave this gap here and start trading into this sell side. So we're moving higher. So I've talked about how I want to see price moving above this high, and you can see how we're trading into 543 now. I want to see this was 549, so 550 is the next draw higher. So I want to delete this inefficiency. Delete this. It has already told its narrative. So let's go about this. Very nice, very nice. That's very nice. That's fantastic. That's what I wanted to say. Very nice closing price right there. So I want to see this candlestick here close again. This candlestick has traded into 552 and 0.2. So I want to see another run above this high here and trade into that high. So this buy side balances and efficiency here will be very, very important. This is now an inversion for a while ago because we've run above these old buy side. This was the buy side above. This was the buy side above today's Asian session. So we ran into that high, consolidating around this inefficiency, and now we formed a very nice, huge possible inversion for value gap. Look at US 500, we're back into that 15-minute efficiency. Now my interest goes into this gap here. Let's come to that gap. Let's extend this to 15. And you can see where the midpoint of that gap is. It's right there. So these are relatively lows here. If we start to trade below this gap here, I'll be going short and aiming for this low. And best case scenario, these relatively lows here. This cost of approachment is 539. was around 540s. This is typical lows here resting below 520. So these are a possible 20-point run into this sell side. And if we move into this low here, that is 509. So from 540s into 510s, there's a 30-point. There's a possibility of a 30-point run from this inversion favor gap here into this sell side. So again, let's take a look at this 15-minute chart. So again, we're so close to Friday's high. Friday's high is right here. So that is 580s. Let's see if we'll see a run into those 580s. So I've talked about these buy side imbalances and efficiency. We spend some time on the upper portion of this BC. We've gone above a swing high here. We've gone above this swing high. So we've managed to get above a short-term premium inside this range. Remember, we are trading above the current new week opening gap. So buy side has been taken here. Buy side has been taken into the marketplace here. Now I want to see price rejecting this gap here, and I want to see trade into this sell side here. So if we close on the lower portion of this inefficiency, remember the lower portion of this inefficiency is below that old buy side. If we close below this inefficiency, that will be very nice, and I will really be anticipating price to start trading into these lows here. Let's look at our 15-minute chart for NAS 100 right here on the left. So we formed a down close candlestick here. I wanted to see this candlestick here close on the low, but we didn't. We failed to do that. So it's really because we are bullish, and going into this next 15-minute candlestick, we managed to get above this or this all high. I mean, this is the current daily high. This is the current weekly high. So it's very interesting to see price trading back into the range because these are a premium. So let's look at this sell side balance based on efficiency. We've gotten into that inefficiency. So I want to see price reject that inefficiency and then start trade lower. If we fail to reject that inefficiency, then we're really not as weak as I'm expecting. Remember, we've not closed below this inefficiency. We've not closed below this buy side balances and efficiency. So we're still trading higher, and you can see how bullish price still is. So we've traded outside that inefficiency. Normally, if I were to sell this inefficiency, my stop would be above this high. So we're not really as weak because first thing first, we've not gone through this basic. So this is still a high resistance liquidity run. We are not trading lower still. So we're gonna end this 15-minute candlestick in the next 15 seconds or so. So you can see how we've rejected that high. We've traded back into this candlestick here, and we've started to trade lower. Very interesting. We're trading at 543 now. I like the way we've closed right there, but this is really stubborn price action. So I want to see price start to run lower. So we're currently trading actually in the lunch hour macro. So we've closed that 15-minute candlestick right there. So this is basically this is a high resistance liquidity run. So what do we do with the high resistance liquidity run? We just we do nothing. We do nothing. So we've just remained on the upper portion of this inefficiency. So next thing we want to see is price going above this high here. So let's take a look at US 500. US 500, we've gone again above this high. Remember I talked about this 15-minute buy side right here above 6,409.3. Very interesting level for price to want to reach into. This right here. This is a very nice pull of buy side. Remember I talked about this CB. We went to it and through it, formed a down close candle, entered inside this basic here, touched this cost of approachment for that 1 minute week, and then we're now trading higher. Now I want to see that buy side being traded into. So we've closed outside that inefficiency in NAS 100. So that is not really appealing to my eye. It's not really interesting to me. So we've traded through plan of close. Nothing really interesting here. And now we're trading in the New York lunch hour. I really wanted to see price go through these buy side balances and efficiency and close on the lower portion of this basic, but you can obviously see we haven't done so. Instead, we've moved higher. We found support on that constant approachment and that old high. So we're moving higher once more. Again, we've closed outside this basic. So next buy side, I want to say, I think they're not really done with this buy side or Friday's high. price must show me that it wants to move lower so that I can go short. I'm not really going short because I'm talking about it. I can't go short because I'm talking about it. Price must show me that it wants to go lower. We must reject premium PDRs. We must reject. The best kind of rejection is a rejection that leaves sell side imbalance by sell efficiencies, and then we trade lower for a shift in market structure, and then maybe trade back into a premium market, and then right there and then we're going short. So it must show me that it wants to go lower. So far throughout this morning session, the New York session, we've been trading higher. So we opened up again, we ran higher, ran back into the range, running back into the fast present value gap. Right there we had, is it existing home sales? New home sales, not existing home sales, new home sales, trading higher. We spent some time, actually, for the most part of the silver bullet time, the silver bullet hour today, we spent it on the proportion of today's opening range gap. And then I talked about how I wanted to see price trading into this new week opening gap, and then we ran into that. So we've stayed up on this premium here, and now I'm also talking about how I want to see this inversion for value gap here support weaker prices. But you can obviously see that price has no interest for weaker prices today. So we've stayed on the proportion of this efficiency. I want to see whether we can run into this swing high here once more. So we're trading at 23,446 now. Going short right now will just be, to me, really, it's just kind of like a waste of time, really. It is because price has not shown me a reason why I should be going short. It has not really shown me a reason why I should be going short. Going short is just going into the marketplace blindly. Just because we have a macro does not really mean that sometimes it's manipulated, sometimes it works, most times it works. It goes against people who have been profitable throughout this morning. So everybody has been bullish, everybody's has been profitable buying it. But when I came in front of these charts, we were still trading at a premium. So we are still trading at a premium. So I don't really have an interest to be going short because price has not given me a reason to be going short. Instead, it's giving me all reason that it wants to still go higher. So I cannot be selling in a bull market. That's just looking at your losses. You're looking at losses. I cannot be selling in a bull market, and I cannot also be buying in a premium market. So I mean, it is what it is. You just have to be patient. Just wait for volatility and just wait for confirmation of a narrative that you believe in. I'm waiting for confirmation of a narrative that I believe in. So if it's not there, it's not there, bro. If it's not there, it's not there. So we're trading higher still. I want to see this this high. If you look at the 15-minute chart, this 15-minute chart was the first red flag that I'm not really interested in going short right there. The 15, this candlestick, especially this, it's 8:30. I mean 6:30. If you look at here, but in the New York time, it's 11:30. It's London close time period. So this candlestick here was the first red flag that I should not be going short. So we closed on the upper portion inside this range. That is bullishness. We formed an up close candle, and next this candlestick here is going to be up close because we've already traded through this premium wick, and we're headed into that buy side, that right there. So very nice run into 560s. So I've already talked about how we have Friday's high resting above 580s. That is 583. And then we'll see whether we'll catch a shot from that Friday's high deep premium. If you look at a 4 hour, we have this old high here staring at me. As fell. So we're remaining a few seconds until this lunch hour macro comes to the end, and that will be for me for this Monday. So until I see something going into the afternoon session, then I'll be interested in talking about it. So we ran into that high. Look at that rejection from that high. Look at how it is retracing through down trace candles. It's crazy. It's crazy, man. Not really weak. 4 hour candlestick, very, very bullish candlestick. So we've gone through this week, and I want to see this high here being violated. So look at that, we've rejected that back into this inefficiency. So let's see whether we'll still close and take out this low here. Going into the 15th minute of this hour. So look at where we've closed. Very interesting. So for weaker prices, I like to see price leave that price right there, that 546, trade through this here and trade into this low. So the macro period is up. We finished it. We've stayed on the upper portion of this BC. If it's a 1 minute BC, then this market is really bullish. Let's look at US 500. US 500. I've talked about this bicep 469. That's where we are headed. NAS 100. I think we are headed also into Friday's high. That is 580s. That's it. That's the ideal interest for where price wants to reach into. So for me, these are relative equal highs. Yeah, it's really difficult for me to be going short here and putting my stop above these relative equal highs. Very, very difficult. So I think that's really it for me for today. I've been recording for 2 hours straight. I've already talked about how I'm interested in some certain price levels. I've talked about what I really wanted to see, but you can obviously see I've not really got it. So I don't really do nothing in the New York lunch hour. Not really like the markets go into lunch hour. No, macro that most times comes in the lunch hour time period is not really as interesting because most times it's normally a consolidation, and I'm not really interested in this kind of price action because it's really difficult. It's a high resistance liquidity one. We can obviously see. So I think that's really it for me for this morning. It has been really nice tape reading this stuff here, and until I see something that is really that catches my interest, I'll talk about it. But right now, just look at these relative equal highs here. Let's see how price trades above these relative equal highs here, and then we'll close this off. So I've talked about how we've stayed on the upper portion of this buy-side balances and efficiency. I've talked about how I wanted to see it close on the lower portion of this inefficiency. Remember, I talked about how price was trading around this inefficiency. We went below it. No sell side imbalance price and efficiency. But and I also talked about this candlestick here, that this was a telltale sign that we were bullish. I talked about this 15 minutes down close candle here where it closed, and this is one telltale sign of bullish prices. And you can see where we are at now. We are trading at that premium level, that is 23,551. So all of these price action drills that I'm talking about is something that comes with experience, and something that obviously I have a narrative that I'm following, and just going by what price gives me. I mean, what price gives back, what kind of feedback that price gives back to me. That's what I'm following. So I've talked about how I wanted to see some things, but they didn't happen. So price must always come back. I mean, it must show you what you want to see, and then you must react. You cannot react out of something that you've not seen. You must see something of importance and then react to what you've seen. So we're trading at above the opening price. We're trading above the mid and all of the opening prices. We're trading above the mid New York opening price. Today is Monday. We're trading above the mid New York opening price right here. That is at 489. We're trading above the New York session opening prices down below here, right here at around 413. So we're trading basically at a premium, but price can still keep moving higher even though we're trading at a premium. It can still keep on moving higher, and you must recognize that. You must recognize that. I've already talked about how we don't really have a high impact news today, especially this week, Monday, Tuesday, today, tomorrow, and Wednesday. We don't really have any interesting news, so we must also tape read and just set our minds straight. Tape read, uh, tell our mind that this is what normally happens when we don't have any news. I remember the last 2 weeks of May, there were no high impact news, and that's when I blew an account. So I learned from that. I cannot be repeating the same mistakes going forward. So you must wait for price to come to you. You must wait for price to do what you talk about, and when it does, that's when you know you're on side, and that's when you execute. Otherwise, price is not really going to do whatever that you want it to do every single time. So you gotta have that patience, and you gotta have that mindset that is gonna do what it's gonna do. It's not really going to revert back because it's a macro. It's not. You must wait it to show you that it wants to revert back, and then you're going in there and selling on a premium. So I think that's really it for today. Until next time, when I see something salient in price, I'll talk about it. So until then, adios.